Hey there, it's Darren and Joe over at Urban Hillsides Real Estate with another fine edition of LA Real Estate Reality. And Darren, we're going to start off with our open house this Sunday, 1 to 4 p.m. at 3927 Degnan Boulevard. And that's in Lemerritt Park. And it's a beautiful Spanish, modern Spanish, I should say.
Yeah,
Darren, what more to talk about? And I'll go ahead and put it up on the screen here for you.
cool. No matter every house, a floor plan is so important. Form and function, and how you move and live in a space. Always something we focus on, and on smaller square footage, it's even more important. But this has great flow. It's got good proportions. The sizing of the living room, of the primary bedroom, the openness of the kitchen dining room, and how it connects to the
Yeah.
yard. That's always the most
Yeah.
important part.
Yeah.
So it flows really well. It's got nice separation of space. It's great for a home office, which is at the front, all the way at the front. Just good flow. Great house to
Yeah.
live in. A
Yeah.
partially finished garage. Somebody could take it to the next level if they choose to. So it's a lovely house. It's a great opportunity.
Well, it's been a great house for a family. I know you mentioned an entertainer's home. There are a lot of good options here and an incredible neighborhood, really. We've met a good number of neighbors and it's very tight, it's very close, it's very warm. So
Yeah,
keep
and
that in mind
centrally
as well.
located for LA. It's so important to be able to get around to different locations.
Yeah. Yep. Cool.
Cool.
All right. And then, the other thing that we have coming up is a mid-century in Mount Washington. Tell us about that.
Yeah, absolute spectacular view home.
Yeah.
It's around 1,300 square feet, 2+2, and it also flows really well. And it's going to be refreshed, so it'll show well. We're
Yeah.
working on some landscaping and staging, and hopefully we'll have that out in a couple weeks. So if you're interested, it sounds like a good match for you. It'll be
Yeah.
somewhere the 1.3 to 1.4 range. Reach out to us.
Yeah. Great. Great. Okay. Well, let's go ahead and move on to our topic. And our topic today really was created from a client text to us asking about what does the new president elect bring to this. And she also mentioned the interest rate, or at least the rate cut of
Right.
25 basis points. And she wanted to know, what does this mean to her? And she in particular is somebody who has a listing coming up. So she was thinking about that. But I imagine this is a question on a lot of people's minds. So that's why we're
Sure.
here today talking about it. What do you think, Darren? What would you say about the market and how it might change?
Right. So it's there's how did it change since the election? Because there's already been an impact. And
Yeah.
how will it change going forward? What are the potential variables that'll impact going forward? And it's not just the president elect. It's also that it's
Wow.
looking more
Yeah.
and more like he might control all three.
Yeah.
That party may control all three components of government,
Right.
which basically allows them to get a lot more done that's on their agenda. So,
Yeah.
um, so what happened recently? What happened this week in the last 3 days? Um,
Mm.
the assumption of Trump being the president is a pro business position, which is everybody understands. So what happened
Right.
is the stock market jumped quickly. So in conjunction with that, we did have a rate reduction 2 days after the election day of a quarter point by the Fed, although the Fed rate reduction does not tie directly to 30-year mortgage rates. It's more about the 10-year treasury. And that went up right along with the stock market, which is why rates did not go down with the rate cut. So if we continue to see a really strong stock market going forward, which is possible with the pro-business legislation that's expected to be put out there, we probably will not see rates go down. So
Right.
that's huge. That's the most important thing right off the bat for real estate.
Right.
So that already had a short-term impact. We'll see how that the impact of that over time. So some of the variables then that will affect that are things like deregulation, pro-business, tax cuts. Now, coming into this year, the business tax cuts that were put into place by Trump are permanent. There's nothing happening there. Those were made permanent. It's the personal tax cuts for individuals that were temporary. So 2025 will be a year where they have to decide what's going to happen with that after that, or they'll be extended. And certainly, if it's more likely they'll be extended. Tariffs, that's a big one. And although it was a big promise, I think his conversation about 20% tariffs across the board was like his conversation about the wall. It's fucking going nowhere. Right. Excuse me. Sorry for my language. But will there be tariffs? Yes. It's just going to be a little more of a pay and play. Let's see. If I impose tariffs on you, I guarantee you all those tariffs are passed through. The cost will go up on everything. Everything will rise in cost, and everybody will have that impacted. Who feels that the most? Typically are the individuals. A little more, but it could also have big impacts on business. So the business world is not going to be pro-tariff unless they're really trying to eliminate competition. And the bigger concern is, and I'd say it's likely, understanding the personalities, it's going to be a little bit of pay to play. I'll impose tariffs on this person so that your business will thrive more.
If then what? Yeah.
So they talk about it. I love the thought of having more things built, more work done in the U.S. But it more often than not doesn't translate to that. And if it does mean higher costs. So,
well, as you're saying, it's a more intricate dance, right? It is a global economy, and you got to play.
Yes.
So we'll see.
Yes. So if we have lower taxes, if we have deregulation, it's possible our deficit continues to rise. What's being done to offset that? And there's conversations about things that will be done, and the efficiency department at the federal government now, which is another topic of conversation. But in the end, if the deficit rises further, that translates to higher inflation, which translates to higher interest rates. So it's all going to be very interesting. It is a dance, as you say, Joe.
Yeah. And and of course, the whole thing overriding this always is low inventory. So there you go.
In housing, for sure.
Yeah.
So, yeah.
There's so
many variables, man. There's so many variables
a lot to talk about.
Yeah.
Yeah. All right. Well, guys, I hope that gives you some indication of where things might be going in the future. We'll keep our pulse on it and let you know. For now, we'll see you at the open house. Lamert Park, beautiful Spanish. Take care. Have a good weekend, guys. Take care.
Bye.